In this video, I'm going to show you multi-time frame analysis and also supply-demand areas so you can set up high probability trades. If you like this video, if you like the value that I'm spitting out, go ahead and comment below. Let me know your thoughts. I'm here to share. Okay, so I have the Dow Jones Industrial Average Index up, aka US30. So guys, it's January 7th, and obviously you can tell that it is a bear market. So what I'm gonna do is basically show you my strategy. Let's get it. So what you wanna do is basically start off on the daily time frame, okay? And I wanna mark up all of my supply-demand areas. Supply-demand area is basically support and resistance. So what I'm gonna do is zoom out and look for high probability areas that look like support and resistance. And in this case, I'm gonna leave this right here. So as you can tell, if I pull out my brush, you can see that there's major areas being hit, right? Multiple times. So this would be a support, okay? And how you can tell that this is a solid support is looking for wick exhaustion. So that means buyers and sellers are entering and exiting trades. So this is a little fuzzy right here, but I also have a good indication that this is a good area of supply and demand. Okay, so I'm gonna do the next one and zoom out, and you're gonna notice that right here, this is another good area. So let's mark this up. And as you can tell, we have support, we have some wick exhaustion right here, and then also over here in this area. Definitely holding on that support area right there, right? Okay, so now I want to mark up one more area. Oops, let me get rid of that. And let's do it right around here. Okay, so there is some exhaustion going on right here. Let me get rid of this. So you're gonna see that there's a couple of support, a couple of bounces, right? And then you're gonna see another one. It didn't quite come down to the support, but we can see that this is an actual range. So the blacks are my daily time frame support. So now I'm gonna zoom in and get a little bit more granular on this chart. So guys, what I wanna do is basically identify support and resistance areas on the 4-hour. So let's take a look at that. I'm gonna mark this red. Let's do 4-hour. Okay, oops, mark this red too. Red. And then, okay, so we're good for now. Let's just mark this one right here down there. Four-hour, okay. So basically you wanna identify support and resistance on the daily and also the 4-hour time frame. Now that I understand my support and resistance areas, I'm able to trade within these ranges. So basically these are the support and resistance areas, and right now you can tell that price is playing up and down right here. So now that I understand my daily support and resistance and my 4-hour support and resistance, I'm able to make plays within these ranges. So right here, you're gonna see that this is a heavy support area and price is holding. Price closed over here around 33,589, and it broke above this little range right here. Okay, and zooming out, you're gonna notice that it is essentially holding pretty good. So if we zoom out on this daily time frame, you're gonna notice that this trend essentially has been broken, right? So what I look for is a break and retest, and then a continuation up to the upside. So this is basically the macro view of the Dow Jones. Right now, everything is looking a little bit more bullish. Inflation is cooling, and the interest rates aren't really hitting the stock market that much. So with all that optimism, I want to be able to understand granularly, right, and zoom in on the 4-hour. So this play right here, obviously we missed this. This wouldn't have been a great trading area, but we know that on the daily time frame, this is basically a good area to get in for longs. Now that this resistance has broken, I want to assume, I'm not gonna say it will go up, but I'm gonna have to assume based off of the higher time frame, so the daily time frame, there was a break and retest. It broke this range. So basically what range means is it's bouncing back and forth. It broke outside of that range, looking for a retest and then a continuation. Okay, so if you guys are day traders, what I would be getting into is a long position to the next area. Okay, and in this case right here, you're going to see long candles. These are strong candles to really pay attention to, because you're seeing that right here there was significant volume, so there has to be an opposite reaction. So right here you're going to see the beginning of it. This candle closed, not such a long wick, and then now we're seeing another bullish candle. So I would have got into a trade right around here. Okay, let me mark it for you. So as soon as this candle closed, I would have got into a trade right here. So let me get rid of this and adjust. Oops. So let's adjust this. I would have put my stop loss a little bit below this resistance area, and then took it to this high, right? Because this is a volume indicator, so you don't have to go off of that daily resistance, but there can be two things that play out on this trade. You can see that there's a break, this first candle closed, and you could have waited for it to retest and then go in for a buy, right? So let's see if that actually happened. Let's go into the smaller time frames now. So now that you have a clearer picture of what's happening, you're gonna notice that right here, that is what happened. So price broke out. It sort of retested right here. Let me get rid of this drawing. Oops. Sorry guys. Oops. Okay, so I just want to get rid of this. Sorry about that. So we have a break to the upside. Price came down and retested, and that's when I get into a buy. So on the 30-minute time frame, that's when you want to look for entries. You can go on the 15-minute if you want. I don't think it's necessary. And then my long position would have been like right around here. My stop loss would have been below that retest. Just to be safe, let's put it right there. And then I would have rode it up to the last price action area. So let's look left. You're gonna notice that right here is, let's just play it safe. Let's just leave it right there. Get rid of this. Okay, so right here you're gonna see this is a almost 8-to-1 risk reward ratio. And I'm not saying this is gonna happen every single time, but this is a high probability trade. Okay, so you're looking at the daily time frame, right? That's where we start out. So let's zoom back out, and you're gonna notice that there is a major trend line to the downside. Price broke outside of that downtrend, and then now it's creating a new support and it's holding, right? So this is the consolidation for a continuation to the upside, right? So long-term traders or long swing traders, you guys could have bought down here after this break and retest. But if you're more of an intraday trader or a day trader, you know, you want to go into more of the smaller time frames and look for actual opportunities. So right here, you know, it broke outside of this resistance, retested, and then boom, this is where you would actually make that buy. Put the stop loss below the resistance area and then ride it up to the next price action area. It's playing out. We'll see what happens Monday morning. This is US30, but you're gonna notice that price will, you know, probably retrace a little bit, might play around, and then continue to go up. So that is basically how I trade. I start off on the daily time frame. Can't even talk about the daily time frame. Mark up my support and resistance. Then I go to the 4-hour, do the same thing, and then I get more granular and I look for a break outside of a range. Once it breaks a range and I see that there's a small retest, that means it is bullish. And in this case, this is a bullish play. If you're looking for an opposite play, then you want to look for price to break outside of the support. So candle closes below the rest of these candles, does a little retrace, and then boom, you take price down, and then you would short it, right? So for this case, I would do a stop loss and then a short, right here. So same thing, 8-to-1 risk reward ratio on the 1-hour time frame. If you want to get more granular, you can see that the candles retrace On the 1 hour, right, you're seeing that there's a retrace. On the 30-minute, you're gonna see a bearish candle. But if you go to the 4 hour, you can't really see anything. So that's why it's important to see that break and retest outside of this range so you can actually get in for a most optimal position for a high risk reward ratio. That's all I got, guys. Thanks.